3. Okay, great. We are live to today's panel discussion. Today I have 3 wonderful guests here who are also very much involved with ITSA. They are all part of the ITC working group. The ITC is the International Token Classification Framework, a token taxonomy framework, where we group tokens according to their characteristics. So let's say, for example, payment tokens, utility tokens, what rights do they hold? How would they be treated under MiCA? I think that's also a very nice topic because I think it just got released today. So there's also some more news coming. And today we want to highlight some differences in tokenomics and characteristics of tokens. And over the course of the panel discussion, we will try to give some nice input about what differences are out there. And at the last 10 minutes of the panel, we would try to answer the questions that have been asked in the YouTube chat. So in case you have any questions also regarding tokenomics or any specific tokens, feel free to just type the questions in the YouTube chat. Okay, then I would say we can start first with a quick introduction round, and then afterwards I can also maybe give some more input on how the ITC looks, and then we can start with the panel discussion. Ladies first, I would ask Madeleine to quickly present yourself.
Yes, thank you. Hello, everybody, and thanks for the invitation. I'm very happy to be here. I'm Marlene, and I'm still studying. I'm doing a blockchain master in Eastern Germany, in Mittweida precisely. And besides that, I'm part of the Bundesblock, which is a German blockchain association focused on regulatory questions. So we try to give blockchain and the Web3 ecosystem more visibility, especially in Germany. And about a year ago, I became a member of the ITC working group, where we classify tokens together. And yeah, can definitely recommend to become a member of the working group. It's really fun and insightful. Christian and Valentin are good teachers if you hesitate. And yeah, look forward to talk about this a little bit today.
Perfect. Thank you, Marlene. Then next we have Felix.
Yes, hi everybody. My name is Felix. I'm also part of the ITC project working group. I joined ITSA back in 2020, right before the first bull run. So it was good time to join the ITSA. So we did classify, I think we took a snapshot of the top 200 token, and I would be really interested actually, we compare them now to like the top 200 now, if the tokens back then, and then now, how many are still there? So we still had like Bitcoin Cash, I think in the top 10 or so. So it was different times then. But yeah, we classified a lot of tokens, as Marlene as well. It was, I think the ITC was freshly developed at the time. So it was like one of the first use cases we did together as a project working group. So it was good times. Besides that, I'm studying management and technology at the Technical University in Munich. And I have a background, besides like the crypto background, I would say mainly in venture capital. Yeah, that's from my side, I guess.
Perfect. Thank you, Felix. And then last but not least, Valentin.
Thanks, Christian. My name is Valentin. My journey started with crypto in 2017 at a startup called Blockchain Hub Berlin, and ever since I've been in crypto. And now I'm with the ITSA since this year. We at ITSA create standards for the global token markets. We identify tokens. We have unique identifier issued by us. And today we're talking actually about the ITC, our second activity, which is classifying tokens. And we have this wonderful working group where, with the help with Christian, we classify tokens. Lastly, we classified the top 300, and today we'll be talking about tokens, classification, and types of tokens, and anything connected to tokenomics and a little bit of legal stuff, maybe. Let's see. Yeah, thank you.
Perfect. Thank you, Valentin. Yeah, that's the thing. I think like I can speak for me and Valentin at least. We have both like a business background, so legal questions are sometimes somewhat harder to answer, but I think slowly we're also getting there. Just maybe to give the audience like a first glance on what the ITC can have an impact on the general understanding of tokens. I mean, there's very often the term tokenomics, which refers to, yeah, mostly like, let's say, what's the type of supply? Where does the token come from? Can I mine it? Can I farm it? Is there an airdrop, right? There's very many different models how to distribute a token. And different models will be applied according to your goals as well, right? I mean, airdrop, for example, is something very nice if you want to reach a certain level of decentralization. Farming is also good, for example, if you want to incentivize, let's say, a stablecoin. So depending on the token that you have, there's very many different characteristics to a token. And the ITC has like this aspect of not only shining light on the, let's say, economics of a token, so supply and many other things, but also, let's say, legal rights, like, for example, it's the case for Tether or USDC, but also regulatory in regards to MiCA. We're also asking ourselves, like, who's actually the issuer of the token? Like, is it, for example, like a company, a government, or maybe not even like an entity with a personality, let's say, for example, a DLT itself or a smart contract. So we really try to shine light on like the many different characteristics out there that tokens have. And as Felix has already said, in 2020, we classified 200 tokens. This was the top 200 according to the market capitalization. And this basically past year we started, and we were just done with the top 300 tokens according to the highest market cap that will be now being made available in the token base. And yeah, I think what we're going to discuss today is mostly the different kind of dimensions. We will give some examples on, let's say, for example, how does a decentralized stablecoin differ, for example, from USDC, like DAI versus USDC, and some other comparisons. And by that, we really try, where we want to clarify maybe also some questions that you guys have. Just like one last point from my side, the ITC, when I started with crypto, was super helpful. Why? Because there's just so many terms out there, sometimes referring to the same thing, like, let's say, application layer, smart contract, auxiliary token. Basically, all three terms right now were defining the same kind of thing, basically ERC20 tokens on the Ethereum blockchain, for example. And the ITC is in this regard very nice that it puts basically all those terms like basically in context, and then you also get to know the differences. And yeah, enough from my side. Let's directly start with the first question. Yeah, the first dimension that we have in the ITC is the economic purpose dimension, where we divide tokens between payment, utility, and investment tokens. Can somebody of you guys maybe like summarize a little bit what might be differences between investment, utility, and payment tokens, and maybe also some learnings from your side from the classification work?
I can start with the first answer. I'll briefly summarize this. So we have the payment tokens. These are defined as tokens that are primarily created to use a means of payment, not limited to specific environment. A good example could be Bitcoin, for example. These payment tokens capture many cryptographic tokens, which are currently widely considered like cryptocurrencies. Bitcoin, Litecoin, Dash is an example, Ripple is one example. Yet it excludes others that are not perceived as cryptocurrencies and by the wider public, even though they are not being created with a sole purpose. For example, you would think that Ethereum is also a payment token, which is not. It's a utility token. Polkadot is another example of a utility token. So jumping to utility tokens are all the types of tokens that are created to provide any sort of utility. And this is a little bit wider definition because it's very flexible category what kind of utility tokens you have. And they're diverse, let's say. And then we have the third category, investment tokens, which we haven't used it that much, I think, this year. These are tokens that serve as means of investment for the token holder, let's say hedging, maybe trading or speculation. So these are the main differences between them, but we can talk more about them. So if you have anything to add.
Regarding like the actual classification, I was surprised to see that it was rather rare that we saw payment or investment token and like mostly utility tokens. In the subclasses, we called it settlement and access or settlement and governance token. So these are mostly tokens which are actually used to pay or to vote for the access to a certain protocol ecosystem. And they're quite restricted to that. And it felt like these kind of tokens are also quite successful in the space.
Mm-hmm. Maybe to add it, because I think because you mentioned just the success of the tokens, and I want to add on that because for me the reason behind the success or the popularity about the utilities tokens, that there are so many out of them, is like because all the protocols, like they try to like create their own ecosystem, and then you don't create an ecosystem around a payment method. You don't do it because like it's just like too small for it. So I say all the protocols who like create these ecosystems they need a utility token, and that's why for me it was mainly the reason why I was not surprised actually to see so many utility tokens. But I mean that's the main goal for a lot of protocols, I would say. And it's like that's perfect. That's the dimension I used because I write my bachelor thesis back in the days, like when the ITC was freshly developed. And I used that in the end, this dimension, like to see whether tokens who are like classified in the same group, if they correlate more with each other, like in terms of their price, than compared to like other groups, which was interesting to see because payment token were actually the ones who were like most correlating with each other. Just a fact from back in the days.
Mm-hmm. Actually, like one thing I would like to highlight, maybe that's also good to know for the audience. So the investment token category that we have primarily aims at security tokens. We didn't choose the term security token because it always depends on like national jurisdictions, and therefore there are some differences. And since basically the framework is supposed to apply on like any type of token like worldwide issued in any country, we were like trying not to use the word security. And yeah, I fully agree with you, also Felix, that basically the ecosystem tokens, whether it's DeFi or let's say also DLT tokens, have really been like, I think, at the forefront of like also innovation, and there has been also, I think, like most of the growth. But let's quickly touch, because I think you made a very nice remark right at the beginning that you said, okay, when we were classifying all those tokens in 2020, we had still a lot more like payment tokens back then, right? You said like there was like Bitcoin Cash in the top 10. I think Litecoin was ranked very high. Bitcoin Satoshi version. I mean, there's all those Bitcoin forks, and I think what we can see also right now is that like there's like this top 100, but like it's changing so rapidly. And I mean, like especially a bull market, that's what we just had, leads to a lot of changes, like in basically what ranks as high, like, but like it's also interesting to see on just like how short-term certain tokens actually rank that high, and then basically we have to change again. Do you guys have any thoughts on that? Or like maybe do you also have like new type of tokens which are maybe now ranked at like 200, 300, where you think, yeah, maybe in like 2 years, this might be something which would I regard maybe like higher in the ranking?
Well, looking at this historically, exactly what Felix mentioned, we had the Bitcoin forks in the past in 2020, even before that, like before the fork of Bitcoin, everybody was trying to create a better Bitcoin. So the payment token industry was very diverse. Everybody is launching their own cryptocurrency. Then we had the bull market, and we saw the consolidating power of all the cryptos, and a few are left in the top 100 since 2020. And then we saw the emergence of Ethereum. Ethereum was still new in 2019, let's say. People were still learning about it. There were this ICO phase where a lot of people raised a lot of money about for new protocols, just like Ethereum. And these were the new trend in 2020 after the bull run, where we saw all the utility tokens rising. And then we saw the DeFi bull run in 2021 or 2020, which also emphasized on utility. And maybe in the future, we'll see a some kind of renaissance for the investment tokens when we see maybe more regulation emerging, which clarifies, okay, what should we do, what can we do with investment tokens, and maybe then we'll see in a next bull run this category rising as well. So yeah.
Mm-hmm.
Also getting to, please go ahead, Marlene.
No worries.
Okay. No, because you're referring about the fast changing environment. If we'd like take the example of like the beloved coin we all know about, like Terra and Luna. I mean, when we first classified it, I don't think it was like, I cannot remember actually if it was in the top 200 back in the days, but it was probably. But I mean, like maybe on like place 130 or something like that. And then it shooted up like being, I don't know, like it was, I think it even surpassed Tether at a certain point in terms of market cap, I guess, if I'm not like wrong. But it was like, it was close at least. And I mean, then like you look a week later and then it just like drops out completely. And then, you know, like imagine just talking about price correlations then, and then, okay, this it's also debatable if it makes sense to like compare those tokens in terms of price, like on those like short terms, because if like they change so fast, you know, you have to like really observe them for a while to get sophisticated data. And then but I mean, it's a fast changing environment. That's all what we know, I guess, which doesn't make it easier as well.
Yeah, Marlene, do you still want to add something?
Yeah, sure. I think you could also say it's sort of a positive development that tokens which have an actual ecosystem and actually stable, like tokenomics, succeed more than the ones who just fork another protocol or don't have that much utility besides the payment function. So there's also some like involvement inside the ecosystem to bring more value, and that's like maybe a positive thing.
Yeah, actually here I would really like to connect, because this is, I think, that we all could observe in the crypto market, that you will always have a first mover. Bitcoin was the first mover, then you had Bitcoin Cash, Bitcoin Satoshi version, then smart contract platforms. Ethereum was the first mover again, right? In this specific field, and you know, Ethereum Classic, Avalanche, Phantom, you know, all these new chains, you know. And I have to admit, you know, if you would now go back and like watch like a panel discussion from last year in autumn or summer, which was called like the multi-chain future, yeah, I was way more optimistic also about alternatives to Ethereum, right, back then. And I feel like right now, like in the bull market, it's always easy to basically see like new upcomers, like new rising stars. But basically now in a bear market, when like the dust settles, you really get like to know like what's being built like in the long term, and what will like be there also in the long term. And I think we also could like all see with like the L2s and with the merge and all the recent developments, that surely like the first mover in a specific field always has an advantage, especially in the long run, right? Because yeah, like just like Felix said, for me it was also quite surprising, because I would not have imagined that like all those Bitcoin folks would like fall so quickly out of the top 10, 20, top 10 to top 20. And yeah, with the Terra, I think was also a good example. So we have also just mentioned, you have mentioned that, Marlene, that there is certain difference between utility tokens. So basically the ITC always has like top categories, and then when we go down, we basically get more precise with the different definitions. And you mentioned before already like that the token could have access and also governance functionality. Could you maybe shortly explain like with maybe like one or two examples? I think that's the easiest on like how we would, for example, like define an access token or like a governance token.
Good question. I think the access tokens were usually these with the proof of stake consensus mechanism. So you have to hold some sort of token to be able to access the ecosystem, while governance tokens usually aim to be sort of a democratic instrument to make people able to vote for certain decisions.
Yeah, I think the one really good one for access was, I think, the exchanges, right? Because
for example, FTX. I'm looking at the ITC right now. So let's take Ethereum, for example, which is a settlement token, but we all know nobody uses Ethereum for voting. So if we take, for example, Polkadot, they have the DOT token, is also a settlement token, but on the other hand, is also a governance token because it's actually used for governance. And the FTX token, for example, is also a utility token, which is settlement and access, which gives you access to FTX services and whatnot.
Discounts.
So, yeah, and discounts. So these are the fine differences between tokens when we look at them, but they're still represented in the ITC.
And among the payment tokens, I think we also have stablecoins. Do you guys remember, because I think that might be also interesting to the audience, because now we have skimmed through all like the top 200, top 300 tokens, what were like the most stable coins like looking like? Like, for example, what's like the fiat currency they are pegged to, and maybe also like some minor differences in the design, because I know that Felix has already mentioned Terra USD, which has apparently failed, but I think there are some more, right?
Yeah, I can quickly elaborate on it. So I would say that, I mean, in terms of market cap, I would lean myself out of the window to say like probably more than like 99% of the market cap is then, when it comes to stable coins, is in US dollars, which is like also what we currently see in the global economy, with like people are aiming for the dollar. So it's like right now it's kind of representing the world in a good, maybe not in a good way, but in like in a similar way. So I would say most of them are pegged to the US dollar. So one Tether US dollar is $1 US. And then you have, I think there are certain projects who also like bring a euro stablecoin on, or there's this project, and when it comes to CBDCs, and we go to like look at China and stuff, they will show up some other packed stablecoins as well. And this is what I would say is the one differentiation we can do in stablecoins, what kind of currency they are pegged to. And then on the other side, you see like the algorithm behind it. So you have like central organizations like Tether Limited, and then USDC as well, which are like companies who like say, okay, for each dollar or each stablecoin dollar which is out there, we have $1 US then in the bank account if it's like in collateral or whatever. But so not collateral, but like a dollar like in bonds or in a certain portfolio, they have it. And then on the other side, you have the algorithmic stablecoins like Terra Lunar, which kind of got in a bad light in recent months, I would say. But yeah, these are the two main differentiators when it comes to stablecoins, in my opinion, at least. And yeah,
somebody wants to add something.
I was surprised to see that there were that many like algorithmic stablecoins in the top 300 back when we classified them. But in the month between the snapshot and diversification. There were some decentralized stablecoins who already had failed. So it was really surprising for me to see that it's that difficult to keep the peg of a token and have the same value as a dollar. And at the same time, it's like due to regulation, it's still the model the crypto community looks for. And the one most successful one is, of course, DAI. And there's not yet really another one which has gained a lot of market share. So interesting to see how this will develop.
Yeah, what I can say actually also for, I think the last bull one that we have seen is that algorithmic coins, I mean, there was not only Terra USD, I mean, there is like Frux, which is like semi-algorithmic, so they have collateral. So DAI is just collateral, right? And we have like Frux, which is like half collateral and half algorithmic. We had Terra USD, which was only algorithmic. Then we suddenly saw basically the Frux model copied, then basically being applied on Phantom with like Tom Finance, where they also was basically printing like Tom tokens, which were then holding a peg, for example, to Phantom. So those algorithmic things were like very, very much favored, especially during the bull run. I think there's also something to do with the yield, right? Because let's be real, like these algorithmic projects, they were like basically from like the yield compared to like traditional stablecoins, like so much more interesting. I mean, 2%, I would say approximately on USDC or USDT, but there was 20% on like Terra USD, right? This is like 10 times the return. So it's interesting to see now that basically after the bull run is over and basically people are pulling money out, that like we can somewhat say that these economic experiments have failed, right?
Well, yeah, I think we can also like conclude that like it's easier to hold a pack if the market goes up, and it's like way harder if it goes down.
Mm-hmm. This goes down to the tokenomics of the project, which when it's not working, it's tested in the bear market and then it fails very much. And adding to the stable coins, we also see that we had these algorithmic stable coins, decentralized ones, but if we look the market cap of all of the categories, we have these tokenized funds or centralized stable coins like Tether and USDC. These are also 19, as you, Felix mentioned, 99% of the stable coins are USD pegged, and 99 of these are actually centralized entities like Tether and USDC, and the rest is very small compared to these. And when we look at the market cap, we only have DAI after the collapse of Terra left in the top, still holding. We also had promising stablecoin algorithmic ones like Fei, which also failed, or it didn't fail, but I think they're closing the project. So they got a reality check after the collapse. And many of these, the so-called algorithmic stablecoins, using collateral just to as a safe mechanism to be sure that maybe later on we'll do it fully decentralized, fully algorithmic. They used USDC for collateral to stabilize their own price. So they were very dependent again on USDC, which is a centralized entity helping them. Even DAI had in 2020 a very, I think they called it the Black Thursday, where also they had difficulties keeping the peg because of other outside factors. The Ethereum blockchain was clogged, so transactions weren't going through. And they also then voted, okay, let's use USDC as collateral for our votes in DAI, which defeats the purpose of decentralized coin. Well, of course, this is maybe just a temporary step to like improve the protocol and then later move on. But it's still something that happened, and it's evident that some of these decentralized coins need a centralized entity to keep them stable. And maybe we should mention one very interesting project, Liquidity, which is also a decentralized one. And it's very small, but this is one of the coins which stayed independent from, like, they didn't introduce any stable USDC for collateral. So they managed to keep the peg. So this is an interesting project to look forward to for the next bull run, maybe.
Yeah, actually, like for the audience, I need to clarify that a little bit, because I think that's sometimes a bit difficult to understand. But like this centralization versus decentralization, definitely in regard to stable coins. So we have centralized stable coins like USDC or USDT, and essentially what can happen is that the issuer, Tether Limited or Circle, just comes along and is like, I'm going to blacklist those coins that are in this wallet address. This happens quite often, especially when there are hacks or exploits. So let's say, for example, a DeFi protocol is hacked, 20 million USDC have been stolen, and basically Circle will try its best to basically blacklist all those USDC so that they cannot basically be further used for illegal activities. And this general idea that there's a company that could blacklist my coins on a blockchain, which is supposedly immutable and resistant against any type of attack, is somewhat a contradiction to, like, let's say, the Bitcoin founding fathers, right? Like the Bitcoin, I just want to call them founding fathers because like they very much care about decentralization, about security and sensor resistance. And when we looked at the Terra case, also what Felix was mentioning before, Terra was basically, the narrative was, hey, this is a decentralized stablecoin, which is not, which cannot be censored, right? And this was essentially combined with like this 20% yield, what made it so fucking attractive to like people that they were just like, I'm going to put all my money in there. I don't care about the risks. I'm willing to go up to like 100 euros, 120 euros of like Terra value. And nobody was really asking the question. I know there was like a few people who were like discussing it online, but there was the general conception on also on crypto Twitter was, we don't care. And I think this is something where, you know, you're starting to mix up basically like true economics, and then again, basically like what's actually happening in reality. And basically, we then basically saw what happened at the end. Correct. And now what Valentin has basically said was LUSD is the stable coin of Liquidity. And from Liquidity, basically the LUSD stable coin is only backed by Ethereum. And Ethereum basically has a very nice advantage. It's a very liquid asset, which means that if like a loan, which is basically like the LUSD mint, has to be liquidated, there's enough liquidity on the market to basically do so. So LUSD in that regard is essentially the most liquid and biggest decentralized stablecoin, because DAI is back to like 40–50% with USDC. Okay. Enough to stablecoins.
Let me add a final thing on stablecoins. We criticize them a lot, but let's keep in mind Aave is introducing a stablecoin. We expect Curve to introduce their own stablecoin. So this is an industry which will be growing in the future. We'll see maybe more innovation in that regard. But for now, the algorithmic ones failed, and we are looking forward to the new types of stable coins in the future.
Mm-hmm. Maybe I throw a question in as well, very quick. Where do you see, or do you have any points on like central banks entering this market? So how will we like adapt the ITC once like central banks are making like things serious and there will be like proper central bank digital currencies? Do you have any thoughts on that? Just out of my
So as far as I know, the ECB is like super concerned about financial stability of the euro. That's why I think they announced that they would make like 5,000 to 10,000 euros available per person in the form of like CBDCs, which I guess would be too little supply regarding the demand. Then again, you might not be able, like CBDCs, I think will function very differently than stablecoins on a blockchain. So I don't think that they're real competitors. I really think that, for example, in DeFi, you will always see private stablecoins essentially that will basically be like in the incumbents in that space. Maybe at some point we will see that you can take CBDCs as collateral to then mint stablecoins again to use those then basically in DeFi. So I think this is really like not necessarily like competitors who will basically like, so that CBDCs will come and Circle will basically just like leave the market. I think like at Coinbase there are also many smart people working, so I think they also have like a picture for the future. And so I really think that like stablecoins will just become more relevant. I think like regulatory changes will really bring forward like the idea of e-money, right? We have like maybe we can just quickly touch on that, because in the MiCA regulation we have e-money tokens. We have different kind of e-money tokens. We have significant e-money tokens, which basically is, I think, a stablecoin up to a certain market capitalization that needs to be there. Also like terms of basically what it's being used for, like for example for exchanges, for trading pairs. Then you have basically authorized, non-authorized e-money tokens, where we could, for example, see right now in the UK that USDC, or let's say Circle, got a banking license, so that they basically can now operate as a bank and basically have USDC as like electronic money. To be honest, I really think that there will be a lot more news on those topics in the next like 6 to 12 months, just because like MiCA just got today released, and I think now it will be like a puzzle, or like correct me, like, because that's how I see it. Maybe you guys see it a bit differently. Like it's a bit of a puzzle right now, like what applies actually on what coin, because they say, for example, the DeFi is excluded from MiCA. DeFi is not, at least like as like MiCA is saying, it's not really like aiming at DeFi. They're more thinking about centralized exchanges like trading pairs. And this is really something, I don't know, maybe somebody of you guys has an idea on that, or maybe like feel free.
Well, I don't follow CBDCs that close, but a good idea maybe would be to use CBDC for collateral for Tether, for example. So you'll be more flexible. Maybe the auditing would be easier, and accounting of all of this stuff, because it's all digital. So redeemability would be maybe easier in the future if you back it with CBDC dollars and not fiat currency. But what I see, CBDCs are like challenging fiat currency in terms of how do will people adopt CBDCs? This is how I see it. And crypto and stable coins are some other category, which is different from the central bank vision for digital money, maybe. And what is important in crypto is also the community. Like you can meet people who are fans of DAI and will talk DAI all day long. You can see people betting against Tether because they had their rumors that they don't have like the money to back the coin. And we also have people who are strongly for USDC because it's the best stable coin for them. And looking at CBDCs, how do you form a community around the CBDC? Nobody is fan of the US dollar, or are there any fans of the euro? Like, is there a community cheering for the euro? No, maybe not. And in crypto, you have these communities which support with however they can the project, and they promote it and they make it fun. Like, it's so much fun to like mint DAI when you lock Ethereum in a vault. And in a CBDC, you might ask your bank to send you money. It's not fun. So, these are my thoughts about the future of CBDCs, but I haven't followed the topic much. So yeah.
Mm-hmm.
I definitely agree with Valentin. I don't think like you can compare CBDCs to the crypto market. I think that the aim is mostly to have a more efficient financial system, like having instant payments and more efficient security settlement. I don't think that regulators think about people using this as crypto collateral or stuff like this. So it's really, for me, it's very separate topics, even though the base layer seems to be the same technology.
Mm-hmm. Actually, like, I think that this will be very interesting for the next 6 months, as I said, to see on. I mean, I think right now, that's what I would hope, at least, that there's a lot of lawyers out there who will now basically look for all those edge cases where we can say, okay, this classification applies on USDC, this one on DAI, this one, for example, let's say on like other decentralized, well, let's say centralized stablecoins as well, because there's also differences. Maybe just like for the audience, we have like this legal dimension, right? Where we basically differentiate between no-claim tokens, relative right tokens, and absolute right tokens. Would one maybe just very shortly explain like between DAI and USDC, what is the difference like in the legal dimension?
I can give a few examples. Like we have, let me look at the ITC. Sometimes I forget the categories, but so we have, in the case of USDC, you can actually go to USDC to Circle and say, okay, I have these tokens. Can you give me the dollars? So this token is redeemable. So we say it has relative rights. So you can actually redeem it for something. In the case of DAI, you can't redeem it for, you can't go to DAI Limited. There is DAI is actually a DAO, so it's decentralized. So you don't get anything for your tokens. You can, so it's a no claim token. And if you have something like with absolute rights, if you have tokenized gold, I think this can be categorized as absolute rights. Because somebody holds the gold for you and issues a token, so you can basically always redeem it. And these are the three main differences between these categories.
Mm-hmm. Yeah, actually, yeah, Felix.
Mm-hmm. Well, one remark in the gold, because I remember like 2 years ago we had the same discussion on like gold and if it's like gives you an absolute right. And I think we came to the conclusion this time that you only have, or it's like only an absolute right classification could be applied if you like have really, if you know, like on the gold, like somebody stores it for you, and then you always have those numbers in the gold, like stamped into the gold, and only if you like, if you know exactly like this number of gold, this is like related to my token, then you have an absolute right. I guess that's what we came to conclusion.
Good point, Felix. And I think Digix was doing exactly that. Digix DAO or Digix Gold, they're now out of business. But back then they were like, you had specific batch of gold which was only for you, and they issued the tokens. But this was on paper, let's say. I'm not sure if this actually worked like that. So, and they're out of business already.
Yeah.
Mm-hmm.
So we don't have many examples for absolute rights tokens now. It's mostly no claim or relative rights token.
Let's say at least in the top 200 or 300, I think this would be very different, for example, for NFTs, right? For NFTs, I think we would see quite often like absolute rights. However, also not always, because let's say, for example, why got the board API so popular? Because basically owning the NFT also gave you the rights to the IP of the picture, which was not given for the CryptoPunks. So we can see also some evolution in the NFT field where we see, okay, there are those NFTs which give me more rights. I can monetize them better. I can basically get better revenue streams from them. They become more valuable. And suddenly we see, hey, Bored Ape, they are like buying, or like basically they're taking over the CryptoPunks, which was like originally like the most interesting like NFT project out there, I think. Let's do like a little quick shift to the second dimension that we have in the ITC with like the issuer industry. Basically, with the issuer industry, we look at like who is actually the issuer of a token. This could be, for example, an exchange, or let's say a bank, or a real estate agency that has tokenized certain housing. What was there something that surprised you, or maybe you can just give like a quick overview of like the top 50, 100, like top 50 to top 100, like what were like the most popular industries in this ranking? Yeah.
Yeah, sure. I think in the issuer industry there was a lot of possibilities. I think we had 20 or 30 ones. Also some very niche industries, but most of the tokens concentrated, as far as I saw, on just two industries, and this was the distributed systems and decentralized applications. This is like a nice general term for projects who try to become a platform themselves, basically mostly blockchain native tokens, so layer 1 and layer 2s. And I was surprised to see that many like Ethereum inspired projects. I mean, I knew that the platform model, just like in Web 2, is one of the biggest sort of honeypots for a project, but I was surprised to see really that much layer 1 projects who aim to become their own ecosystem. And the second one was the DeFi industry. So there was really a lot of protocols there.
Mm-hmm. Yeah, and I think this is very interesting because the DeFi tokens very often go hand in hand also with the alternative L1s, right? So let's say we have Uniswap, which is like the primary DEX on like Ethereum, but then, for example, on Avalanche, we have then Trader Joe, or on Phantom, we have SpookySwap. So basically every L1 token that is there in the top 100 most likely also comes with some DeFi tokens, basically on the ledgers. Do you guys think that like DeFi has already basically been like one of the most major use cases now? Do you think like the other use cases, let's say, it says like AI use cases, IoT use cases, like Helium, and why do you think are they still lagging so much behind compared to, like, for example, DeFi? Is there something like that? Basically, you have some observations.
Sorry.
Go ahead, please.
I feel like it's much more easy to implement like industries that can completely work on chain and who don't rely on external data, and this whole IoT AI stuff is like more difficult to implement. So maybe we'll see it in the future. Sorry, Felix.
Mm-hmm.
No problems. I totally agree, because also like the blockchain has proven itself as a good technology for like the financial industry and for the sector, but I'm not sure if it's like it's like kind of the buzzwording. You just put all the buzzwords together, you give a token out, and then you just like hope for a lot of money. So if you like throw AI, blockchain, and IoT together in 2021, like you can probably show up to any VC in the world and it's like they give you money for sure. So I think the blockchain has not yet proven itself as a technology which is like really useful for AI. I think because we know, like, the world knows how banking works like since 100 of years now, but we not knowing like we have not the same amount of experience and the use cases we have for AI now, because it just only exists like for 10 years. So if it's like, it has to be seen if it's like a good thing to like just use those two technologies together and then see what comes out of it. So that would be my explanation why the financial industry works so well on the blockchain, and the others may lag behind. At least that's the case for me, or from which goes in my head.
Totally agree with your points and Marlene's points that also connecting to the physical world in the blockchain is even bigger challenge, and creating a project with the right tokenomics, like for example, the case of Helium, where you incentivize people to set up Wi-Fi points around their houses so you can create world network. The problem there is that you run out of incentives. They're printing a lot of tokens to incentivize these people to keep the hardware running. And they're betting on that people actually will be using the network and will be paying for data. And this is now we are going like this is some kind of business model which is maybe not yet tested. And DeFi, we see that in DeFi we have investment bankers quitting jobs and going to DeFi and implementing the same instruments on DeFi in much faster, leaner way. And I would also see that people are like attracted to speculation, and DeFi is the best way to speculate on something, on like maybe make a quick buck out of some kind of investment. So this DeFi industry attracts a lot of people who are also just speculators, creates a bigger community, and also having already a financial industry which can be somehow implemented in a different way on blockchain is something that drives even more protocols on building DeFi. And we might see in the future other industries like NFTs emerging also as use cases. But we saw a few cycles already. Back then in my university, I wrote about supply chain and blockchain, and that was one of the biggest topics when Ethereum launched. Like Ethereum was new and everybody was wondering about these smart contracts, and everybody said, we'll track everything on the supply chain with crypto. And now nobody talks about it because people have been testing. There are still people testing, big companies, but this was like a topic for conferences, and now you can't organize conference around crypto and supply chain. So in the future, we'll see other industries maybe emerging, but for now, DeFi had this perfect flair, and the case that we saw the multi-chain future unwrap after 2020, where all the blockchains got interconnected and people started moving assets across blockchains. And this was a big like move for crypto, and DeFi was in the middle of it. So I think this was the case why DeFi is so big.
Mm-hmm. Actually, like this is now the perfect like crossover to one of our newer dimensions, which is like the consensus mechanism. The consensus mechanism usually like refers to the ledger, right? So let's say we have an ERC20 token like Uniswap. It was proof of work when Ethereum was proof of work, then Ethereum became proof of stake, now it's proof of stake. So it essentially doesn't really say a lot about the token itself, but more about the ledger. However, I think Marlene just like said that, and I think Felix also, that was like that for certain use cases, DLTs need to have a certain speed, or need to be able to provide a certain cost. Let's say, for example, for IoT, there's a lot of data. Do I want to save the data on chain? Oh no, it's not possible. It's super pricey. Block space is limited. So I have to come up with alternative DLT ideas which are able to basically compute, let's say, way more data than, for example, let's say, regular proof of work. I think we differentiate like between like two major like categories. Does one of you guys maybe quickly want to touch on that? Otherwise, I can also like explain a little bit.
It's funny because like the dimension came after I was really heavily involved in the ITC, so I'm not really sure if I'm the best one to talk about it actually.
Okay, like basically what we have is like basically voting based consensus, right? Like for example with Ripple, and also with, for example, IOTA. I mean, many people nowadays, because they are already developing for quite some time, say like, okay, well, IOTA, they're basically using the Tangle where basically messages have to confirm messages. So basically we don't have any longer like this block space where everybody is like competing against each other, but like alternative like ways of basically of reaching consensus. And I mean, everything started with proof of work. We now had basically the transition to proof of stake. Do you guys for maybe think that now that basically proof of stake, I would say, has somewhat succeeded over proof of work? Also because basically of the energy consumption, that we might see also like newer and again alternative consensus mechanisms in like 1, 2, 3 years? Is this maybe something that will then enable further use cases that basically proof of stake and DeFi are very interconnected because both need governance, and basically the next one would be maybe like scalability, which then could be, for example, on Hedera or Algorand or IOTA?
That's a good question. I feel like most protocols, even though their consensus mechanism has a very fancy or new name, are basically a proof of stake with very little change. And I think Ethereum already in 2016 knew that they want to go to proof of stake one day. So it's like these two consensus mechanisms are state of the art since beginning of the ecosystem. So I'm not sure how much that will come up in the next years, but the whole DEC thing with Hedera and IOTA is definitely one that is still open, and I think it's interesting to see alternative kind of DLTs.
Mm-hmm.
Maybe to add to the consensus wars, let's say, I think we're slowly moving away from proof of work, and Bitcoin will be the last one standing. And I'm not against proof of work. Maybe it's a perfect use case for the most decentralized cryptocurrency in the world and most secure. But people and developers need more flexibility, and maybe everybody implementing proof of work is also very energy intensive. We see it with the gaming industry, how they're met at the crypto industry, because Ethereum used to be mined with video cards, and people couldn't buy any video cards from the market. So we saw a few approaches to proof of stake. The first ones, always the question with consensus is, how do we scale it? How do we make it cheap? How do we make it secure at the same time? And the first proposal I think I remember was the delegated proof of stake, which was a very centralized proof of stake design proposed, I think, by Dan Larimer from, he's the EOS founder, but before that he founded Steemit, which also uses delegated proof of stake. And one of the first decentralized exchanges, I forgot the name about, but one of the first decentralized exchanges was a whole blockchain, and it was on DPoS, the delegated proof of stake. But the industry is trying to decentralize more and find a flavor of proof of stake which is decentralized, fast, secure, and cheap. And good examples might be Cosmos, which has the Tendermint consensus. Or Ethereum, let's see what happens, but it's promising. We have also Polkadot with their own flavor. Cardano has Ouroboros, which is also a flavor. And but we certainly we're moving to proof of stake, except for Bitcoin. So yeah, these are a few points
No, I actually get that, because like basically it's somewhat also a guessing game about like how further use cases will basically be served, about alternative consensus mechanisms. Very likely there are even right now some DLTs in the making that we might not even have heard about. because IoT use cases are also not something where you necessarily always want retail customers, right? So I would say let's just see what's basically coming in the next 1 or 2 years. I'm not 100% sure, but maybe you guys know, like when is the next Bitcoin halving happening? Basically in like, I think 1 year, 1.5 years, right?
Something around that, yeah.
So I guess basically then in like 1 to 1.5 years, we will basically reshuffle again all the tokens that are out there, and very likely we will see newcomers coming up to the top. But this will be then basically a topic for another panel, because we are already like 1 minute over the time. I would like to thank all the panelists for being here today, for giving their insight. Yeah, and also the audience for tuning into today's panel discussion. In case you have had still some questions, you can still reach out to us via email. Otherwise, you're always very much welcomed in the ITC working group, where it's always like very common thing to discuss like things that have just happened over the past, let's say, weeks or months, and then basically jointly we always try to figure out like, yeah, what happened, how it happened, and what might be the next things that will follow up on it. Okay, but for now, I would like to thank you guys. Talk to you soon. Have still a nice day, and then I would say goodbye.
Thank you.
Thanks for organizing.
Welcome.